Good morning viewers. Today is Monday, December 1st, 2014. Herein I give a wrap-up of the commodities complex as it stands now and for the week ahead. First, we need to highlight the macroeconomic fundamental news and data that have happened over the past couple of days. First is the Swiss referendum on gold took place yesterday and it has been unanimously rejected by over 78%, which means the vote is against stocking up of gold reserves by the Swiss government. If it were vice versa, or if it were approved, the Swiss government would have had to buy more gold of at least 1,500 tons from the open market, which could have pushed up the prices. But as a result of the rejection of the referendum on gold reserves, the prices have opened sharply lower. The second news is the RBI credit policy that is coming up tomorrow. It's likely to have an impact directly on the INR moves. INR is now weak, trading weak for the past couple of trading sessions, above the 62 at around the 62.20 mark. The trading range is expected to be 62.5 as support and 61.7 as a resistance. The RBI credit policy tomorrow will give more insight into the thinking of the governor, Mr. Rajan, as to what he feels as far as interest rates goes, whether he is likely to reduce the interest rates, although the pundits are saying that he is not likely to reduce the interest rates and likely to take place only in the February 2015 RBI credit policy. But more insight would be given into the commentary that is likely to make on the shape of the economy, the inflation numbers and the GDP numbers, etc. So keep a watch tomorrow on the RBI credit policy. Even as the RBI over the past few trading sessions has been artificially entering the market and keeping the rate pegged at around the 62 per dollar mark for the past few trading sessions. As we all know, for the past 10 days, the data from the Japanese markets and the Eurozone has been quite weak, and the economies in both these zones have been pretty weak, and Japan has formally entered into a recession also. Now, this weakness in the Japanese yen and the euro has automatically strengthened the US dollar, and it's at around 88 as of now. So although the US economic data for the past few days have been mixed, consumer confidence low, the GDP low, and the employment numbers a bit positive, there is no major uptrend in the shape of the US economy, but the US dollar index is held high mainly because of the weakening of the Japanese and euro currency. Now all eyes as usual have started focusing on what the Fed would do next. A section of the media is now projecting that the Fed is likely to increase interest rates by around the May-June of next year or the middle of next year, while another section feels strongly that it may not do so. On the other hand, a QE4 or another stimulus package may have to be introduced at some stage or the other to keep the US economy in a general positive or in an uptrend. The other thing that needs to be watched out are the data which are likely to come out in the current week. On Thursday and Friday from the US markets, we have the unemployment and the job data which will have a direct impact on the bullions. Now I will give you an insight into the individual commodities. Gold is now trading at around the 1150 mark, down about $15 to $17 from Friday night's close, basically because of the Swiss news that has come in. Strong support hit an intraday low this morning of around the 1141. The supports are at 1140 and 1132. A break below 1132, which has the double bottom formed over the past month, if it breaks and closes below 1132, could see more significant downside towards the 1100 and the 1080 mark. Now we've been maintaining this level as far as gold is concerned for the past month or two. So long as 1240 was not broken, it was unable to break about 1240, and hence this technical breakdown has taken place, and now trading at around the 1150 mark, expected to test up to the 1132. A break below 1132 could see 1100 and 1080, which cannot be ruled out. Now as far as MCX goes, MCX contracts for December expires this week, so we'll talk about the gold and silver second month contract, the gold February contract. Gold February now trades at around the 25,665 mark, down over 2% in intraday trades today. Support is now seen at 25,580 and resistance at 25,800. Overall, you can see that during the first half of the session, some consolidation could take place or even a pickup could take place in the rates, mainly because of short covering rally or profit booking rally that could take place in the morning session. But a clearer trend would be available once the US markets open in the evening. So the current range could be seen at 25,580 on the downside and 25,800 on the downside. So long as either of these two ranges are broken, only the next move could be seen. Silver is now trading at around the $14.90 mark. We've been maintaining this stance for the last couple of months that a break below 16.5 could target $15, $14 and $13. Now trading at around $14.9, we see supports now at 14.5 and 13.8 to be tested, with resistance only above the $16 mark. Now as far as MCX silver, we talk about MCX silver March, which is now opened at a lower freeze of 4%, now trading at around the 34,000 mark. 34,000 mark support is now seen at 33,700 and resistance at 34,300 and 34,500. Here again a consolidation in the first half of the day is likely to take place, as it is tough to estimate a straight downward spiral taking place straight away to the 6% mark. Some consolidation and a minor uptick could take place before any further downside takes place. But overall in silver also, on the MCX we are bearish till around the, on a positional basis, till around the 33,500 to the 32,500 mark in the days to come. Resistance positionally only above the 35,700 mark. Crude oil has opened gap down over 4% lower, trades at around the 4,100 mark. We've been maintaining this negative bearish stance for the past couple of months, right from the levels of 5,200, and we had forecast a final levels of around 4,100, which has been achieved now. Trading below the $65 mark, we expect supports on a positional basis of $60 to be tested, and if that gets broken, further downside of $5 to $8 cannot be ruled out on a positional basis. As of now, support is seen at 3,950 and resistance at 4,200. As of now, no trade is recommended during the first half of the session, and wait for consolidation of a breakdown or a breakup above the levels. But overall, sell on rises as far as gold, silver and crude oil is recommended as of now. Natural gas has also opened gap down on a downward freeze, trades at around the 248 to 250 mark. Support is seen at 245 and resistance at 252 and 255. Overall, the trend for all commodities seems to be on the downside, and hence fresh levels would be posted in our website and blog for trading calls that can be entered into. Copper is now trading at around the 392 mark. Our forecast for the past month has been on a weekly close below 403 for targets of 390 and 385 to be tested. As of now, trading at around the 392. Immediate resistance is at 397 to 400, but we expect downward levels of our supports of 390 and 385 to be tested in the days to come. As of now, it is trading at least 1.7% lower at 392. Sells can be initiated on small rises with a stop loss above the 398 mark for targets of 390 and 385. Nickel is now trading at the 998 mark. We had given an intraday sell this morning at around the 1004 levels with stop loss above 1014 for target of 992. 992 to 990 is a strong support level. Further weakness or downside could be seen on a close below 990. As far as zinc goes, we had given in our weekly call sells at up to around the 138 to 138.20 mark for target of 136. Now trading at around 137. Like other commodities, it has opened lower. Now trading at 137. Expect target of 136 to be tested. On a break and close below 136, we expect 135 and 134 to be tested in the days ahead, with resistance above the 138.50 mark. Aluminium is now trading at 125.15. We had given a weekly sell call at around the 125.80 to 126 for targets of 124.50 and 124. Now 125, a break below could see levels of 124 and 123 to be tested, with resistance above the 126.80 mark. Lead is now trading at 126, support is seen at 125.30 and resistance at 126.70. Like all the other base metals, once the other metals also climbed out, further drop in is expected in lead mini also. Overall, we see that all the commodities have opened sharply lower this morning, giving less of opportunities for intraday trades during the morning session. Need for some consolidation to take place or small rises for initiating sells again in the market, which trading calls will be posted in our website and blog at www.akshayaship.com. Please visit our Facebook and Twitter account also. Have a safe trading day. Thank you.